Stock markets shoot to the moon. Are we overdue for a minor pullback or major correction? This is technical analysis of the stock market's update and forecast for the week of August 31st, 2020. Hello traders, I'm Richard Graham. We're going to start out by taking a look at the S&P 500, and it has been on fire, right? The last few trading days, ever since it broke out, it had a big gap up right here on August 24th, Monday. Broke out of these all-time highs. We've been waiting for this level, and ever since then, it's been up, and up. We've had 7 straight days to the upside in the S&P 500. What we're looking at here is the 4-hour chart, and we can see we had these lows back in late June, so 2 months of nothing but basically straight up without hardly any pullback at all. Zooming out to the daily chart, we get a picture of how overextended we really are. We haven't had a major pullback in this market since this one right here on June 11th. Could we be ripe for another one? I think so. You see, ever since we had the March lows, we had this channel right here. Once we had this sell-off in June, we were straddling this line, and then we broke below it again on July 24th, and it's been acting as resistance ever since. So what was previous support is now acting as resistance, and we're sitting right there at the top of that channel. Like I said, we've had multiple up days in a row, and I think we're due for some type of pullback. Let's drill it down to the 30-minute chart, get into that smaller time frame, see where we might have some areas of support coming up. The first area of support that I see that we might come down to is to fill this gap from Monday the 24th. And that would take us down to that nice even level of right around 3,400. That is actually where we had that major resistance line that we bounced off a few times and finally broke through. This is now going to act as significant support. So we could come down here and then bounce right off of there. That's an area where you can look for an opportunity to get long this market. Now, if it doesn't bounce from there and we get a significant sell-off, we could go all the way down to around 3,200. That's the next significant area of support, right where we had this island reversal pattern back in June. And if we take price all the way back to June 15th, and this other area where we hit on June 26th, that'll take us down to the nice round level of 3,000 on the S&P 500. Now, if we continue higher from here, we see resistance at the top of this channel, right around 3,580 to 3,600. The rise in the Nasdaq has been even more pronounced than the other indexes on the stock market. You can see now we have reached the top of this channel, and I would expect some type of pullback as well. Maybe we could come down to the bottom of this channel and see if there's some type of support. Otherwise, we do have more support right around 275. If not, we have more support down here at about 250. The Dow Jones Industrial Average has not pierced those all-time highs yet, however, is in the process of filling this gap from late February. The top of that gap will take us to 290, expect a little resistance there, and then the all-time highs in this ETF for the Dow is right around 296. Expect some resistance there as well. The small caps, the IWM ETF fund for the Russell 2000, still in an uptrend, consolidating right now. Expect it to resume higher from here. If not, we do have some support right around 146, 145 area. The VIX is the fear index, and I had pointed out a few days ago that we were in this lowering wedge pattern and possibly ready to break out of it. As you can see, what was lower lows and lower highs has started to bottom out. We got a double, triple bottom on the VIX, and now it looks like we're starting to get some higher highs. If we pull back to the 30-minute chart, we see that we did have a significant pullback in the VIX today. However, we could go higher from here, and that could be bearish for the stock market. The VIX is still in contango, though, for the bulls. That's good news. Pretty steep contango at 17% between the first and second month's VIX futures contracts. The major cap-weighted stocks are what's driving this market right now, and they're all doing so well. Look at Apple. It's really a bullish chart. Every time I draw one of these channels, it breaks through, and it creates a new channel, breaks through again, and here we are consolidating for the last few days. These patterns generally break to the upside. Right now we're creating a bull flag, and I expect it more upside in the following weeks. Same thing with Amazon. We were trying to break through this major resistance. We finally broke through it. We're consolidating now. Expect more upside. We've got a lot of support here. Microsoft is looking really good. As you can see, we finally broke out of this 2 or 3 days ago, and we might pull back to this area of support. Google, up above this triangle pattern that we finally broke out of. It's above its upward sloping trend line. Very bullish. Facebook, also looking bullish. We broke out here, and we're consolidating for the last couple of days. Tesla, also a bullish looking pattern. We're going to expect some type of a pullback eventually. At least we're going to go into some type of consolidation. This original move we had here, I said once we broke out of this bullish flag pattern that we would have a similar move, and we have. Now I would expect some type of consolidation over the next several days. Bitcoin has been consolidating since right around the end of July, and we still haven't broken out of this area. However, I'd still be bullish if we remain above this yellow support line at 10,400. This is the 10-year government bond interest rate yield, and as you can see over the last couple of weeks, it's been heading up. It's inverse to bonds, and we've broken out of this triangle. However, in the long term, we're still in this long-term downward trend. Gold is still looking bullish. We had some major consolidation over the last couple of weeks. I do expect it to resolve to the upside as these patterns normally do. It looks like, if we drill it down to the 30-minute chart, it looks like we did actually pierce through here and break through this previous line of resistance on the lower time frame. So I would expect us to go up from here. Same thing for silver. This is SLV. And we're in this consolidation pattern here on the 30-minute chart. It is looking bullish. I expect it to resolve to the upside as well. The US dollar is still in a downtrend, and that's usually bullish for the stock market, gold, silver, and Bitcoin. This is the Warren Buffett indicator, and basically it's how overvalued the market is right now. It's considered significantly overvalued, 184.6%. That's the ratio of the total market cap to annual GDP. When it gets high, the market is considered way overvalued. As you can see, the last time we were at this level was never, at least not on this chart, and this goes back to about 1970, it looks like. We did hit some peaks of right around, 135%, looks like, right around the year 2000 when we had the dot-com bubble burst. But now we're up here, right here. 184.6% of GDP. And you know, Warren Buffett is a value investor, and so that's why they consider this indicator the Buffett indicator. All right, traders, that's where we stand. S&P 500 a little overextended at this point. I expect some type of pullback soon. That'll give us a chance to get back in or add to our positions. If you like these kind of videos, make sure you like, hit the subscribe button, and the notifications bell. And we'll see you next time. Have fun trading.